obviously the session for today, or for the next 20 minutes here, is called the Millennial Disruption to Fintech is Here to Stay. Now, what do we actually mean with this? Okay, we mean with this that basically the newer generation, and most importantly the millennial generation, with regards to fintech, are disrupting the entire fintech space. Why is that the case? Because it's very important to realize that the needs and the expectations of this millennial generation is significantly different from any generation before. 2/3 of all the millennials, they worry about their financial future. And therefore, the way in which they approach finance, and most importantly, the tech companies that operate in the financial space, is significantly different. Also good to mention that one of the reasons that people, or at least millennials, are a little bit worried about their financial future is because actually this is the first generation that's worse off than any generation before. Obviously, it's driven by a number of factors where I will deep dive a little bit further on in this presentation. Good. What kind of changes do we actually see in the market that are causing millennials to change their behavior in comparison to other, baby boomers, for example, other generations, older generations? One of the most important thing is that obviously we're dealing with a very low interest rate environment, and this is across all the more developed markets. So if you look at the Eurozone, for example, you're dealing even with a negative interest rate, which means that banks are not in a position to provide interest on savings anymore. Next to that, there are a few other factors. The pension systems, for example, are very unstable. At the moment, basically, there's been a birth wave. I just mentioned the baby boomers, but there is a very large aging population that is going on pension right now. And the younger generation have to carry the load for their pensions to a large extent. And if you therefore look at the percentage of retirement savings as a total GDP per country in Europe, at least, you'll see that in mainland Europe, that percentage is very low. We're talking about 20, below 20% for certain countries, and that's in comparison. There's a big contrast with regards to certain other markets, like for example the US, where the total percentage of retirement savings is more than 100% of GDP. Now, this of course, this large discrepancy is making sure that the pension system is to a large extent very unstable, and the millennials are therefore also looking at other ways to build up wealth for the future. The last thing also to mention is that often a house has been a pension as well, and house prices have been out of reach for a lot of people. So people have to look at alternative methods, and especially the millennial generation. This is very important for. So that's why we really want to focus ourselves within Bucks on making sure that people can be helped with building up wealth for the future by creating an approach that's very accessible, intuitive, and first and foremost also affordable for people to start investing in the financial markets. You can see here also in this slide, if you look historically, obviously there have been a few dips here and there as well, but basically if you have invested 1,000 euros in early 1990s, would have yielded more than 11K. So the return has been historically quite okay, also on an annual basis, as long as you do it the right way. Good. So let's deep dive a little bit further on the millennial generation and the Gen Z generation also, because these are both target groups for us, and these are both basically a target segment that is, like I said, for which I just explained, all of this is applicable. So who is the millennial? Now, I would like to share some insights about the group itself, and also about how they actually invest. So first and foremost, if you look at a lot of geographical areas, most importantly, for example, Europe, you see that actually it was always historically very much a savings-driven culture. People just basically benefited compounded interest. Now, that is changing to a large extent. 3/4, 75% of young Europeans do not see the point in opening a savings account ever. And the reason for that, obviously, is not just the return, But there's a few other factors that play a certain role in that. The most important thing is that there is just no need to build up wealth with savings anymore. It's just a pot, and you might as well use that same pot to invest in something that gives you a better return. Also, this is to a certain extent driven by the pandemic, but not completely. I don't personally agree that the pandemic is the reason behind this, because we've already seen this change happening even before the pandemic. Also good to mention. So the whole approach with regards to managing your wealth and managing your finances is changing from a savings-driven approach to a more investing-driven approach. Another thing which is important for the millennial generation is that they're in it for the long run. So we've done quite some research, actually, and the focus of the millennial generation is actually more on the long-term wealth building approach. So if you look at the next generation of investors, 40% of these investors, they have a long-term time horizon, so 20 to 30 years even. And almost 70% of Gen Zs and almost 65% of the millennials, they apply a diversified approach towards their investments. And this is actually the way to do it. Also, you see that ETFs are becoming very, very popular. Obviously, you saw about a decade ago that robo-advisory was becoming very, very interested. But nowadays, you can buy an ETF that mimics exactly what a robo-advisory firm would basically give you as well for a way lower price. So these changes, we've seen that especially the millennial generation, they start to understand, they also take control of their own finances themselves. They want to keep control. More about this a little bit later in this presentation. But the most important thing is that they are in it for the long run, and they basically focus on long-term wealth building. Another thing that's also good to mention is that they really focus on getting a better future. You see that a large percentage of the millennial population, they choose where to put their money. And there's a conscious approach towards this. So you see that thematic investing becomes more interesting. ESGs, for example, people worry about their future. And if you look at basically how people think about what to invest in, you see that the future of what people think is going to come is actually one of the most important sources of stress for people. So that's why people do believe, especially the younger generation, they see the need to do something better for the world. They see that we're dealing with a situation that's unstable. They see global warming, for example. So you see that a lot of investments go to newer technologies, green investing, like I just mentioned, ESG, and also really focused on maintaining control themselves. Good. So what's the role of fintech in this whole thing, right? So there are many fintech firms, obviously, and we're one of them. And fintech should play a role in making sure that the millennial generation can basically that demand is supplied. But at the same time, there are a few other factors that are important to mention here. And I just want to mention 3 ways to get started for fintechs to really help people build a financial future. First and foremost, education. Okay, so we still see that the percentage of people that are investing at the moment is still relatively low in certain well-developed markets. Like I said, the millennial generation at the moment is changing the way in which they invest, but the total percentage of millennials that are actually investing at the moment is, from my perspective, still too low, simply because I think everybody should start to invest and everybody should have an investment account. So for people to make sure that they understand how to do this, you need to educate them. So what we're trying to do, for example, we have an in-house editorial team. We have really a group of people that are just focused on making sure there is, articles, news, knowledge portrayed on our website, in our mobile application, for people to take that information and really educate themselves. Real-time news. So obviously there are a lot of factors into play with regards to what's happening in the world. And there's a lot of news outlets that really focus on giving that information to the people. And providing that on a real-time basis is very, very crucial, because otherwise people don't have all the actual information to make their investment decisions. And last but not least, what we're focusing on is having a learning center and a knowledge center where people can go to. And if they want to, they're in doubt, for example, about a certain investment strategy, or they want to know what is our best practices with regards to investing, there's a knowledge center where people can go through a step-by-step program and basically educate themselves on how to do that. Education, therefore, is on the forefront of our mobile application, and it's also a crucial thing, especially for the millennial generation, because they're young. And therefore, for most of the millennials and Gen Z, starting to invest, the first touch point of investing is actually now, because only now there is often enough capital, or at least an excess of capital available on their accounts to start investing, start this journey with. Right, the second point is understanding the financial needs of the customer. So as a fintech firm, you need to understand what a customer, what a millennial actually wants, right? And you see that many millennials, they want to start investing. 90% of the people we've spoken to in the market, and we've done independent market research for this, they want to start investing. But actually only 15% actually invest. Now, this is an average across different European markets, because in the US that percentage is significantly higher, which also shows the potential, obviously, for neo-brokerage firms in Europe like us. But the percentage is still too low, and there's therefore still a gap that needs to be bridged. And the biggest issue with bridging that gap is currently the complexity to actually start. And the complexity is there on two fronts. One is, like I just mentioned, the knowledge and the education that we need to apply as a fintech firm. But the other side is actually the technology, right? Making it very easy and simple for people to start investing. So those are the two very important things to mention with regards to bridging this gap from people that want to start investing and the people that actually invest. And the way to do that is actually understand what people really want. Third one is making sure that the commercial reality between us and the customer are actually aligned. At the moment, we still see a lot of financial services companies, if I may say so, on purpose not mentioning fintech as a concept here. But if you look at financial services companies, they're so much profit driven, and obviously any neo broker like us also has in the end a focus on making profits. But we really believe that the only way to do that and build a sustainable company for the future is if your interests are completely aligned with the interests of your customers, to really make sure that everything that you build for your customers are also adding value. And this is a very crucial thing that is sometimes underestimated. And especially the millennial generation that grew up with a financial crisis to a certain extent, right? The 2008, 2009 bubble. It's very crucial for them that, they should trust the company they're working with. And trust you gain over a very long period of time, but you can lose it in a very short period of time, obviously. So to make sure that you are completely aligned with your customers, from a commercial standpoint, really making sure that everything that you do, all the decisions that you make are in line with what the customers expect and what the customers want. So, why take our word for it, obviously? Look, we built our own neo-brokers platform from scratch. We're, I think, one of the first companies in the last 10 years that built a full-fledged infrastructure for a brokerage firm from the ground up. It took us a few years, to be honest, to build that entire environment, and there are a few benefits to make sure that we add value, and it's also one of the reasons why we've made that decision to build it from scratch. Obviously, the most important things are the cost benefits, right? The more you do yourself, the more margins you can maintain, and the more cost efficient you can be. But also, it's very important to mention that we're very flexible with regards to what we can cater towards our customers. In Europe is a very fragmented environment, for example. Every customer has a different tax system, different payment solutions, different ID documents. Everything is completely localized. And also the needs and the requirements of the customers are completely localized. So therefore, you need to have some flexibility built into your mobile application. And that starts with your backend environment, obviously, the brokerage system itself. A few other factors, there's a shorter time to market. Obviously, if you want to build a newer feature, for example, newer order types, adding new product features, it takes us a lot less time to build it. We'll be therefore launching next to just real cash equity and ETFs. We'll be launching cryptocurrencies, for example, as well in a few weeks' time. Also, scalability. We can, basically integrate a pipeline very easily ourselves. Based on also the need of this millennial generation. And there are no dependencies. So we're not dependent on third parties to a certain extent. I mean, every company has certain dependencies on third parties, but for the crucial parts of the value chain, we made sure that's all in-house. And that also makes sure that if the technology is there at a certain level, there are also no outages. Now, one of the key touch points we can show that is actually true is, for example, the whole GameStop hype, where we had 100% uptime across the entire period. So in the end, we're trying to cater for that millennial generation, really trying to make sure that we cater to that specific need where there's this shift from savings to investing, and really help people to start build wealth for later in a very intuitive, accessible, and affordable way. And the way to do this is to make sure that your interests are completely aligned with your customers, and really create something for what we call the Instagram generation. And that covers not just the millennials, but also the Gen Z generation. Good. Follow our journey. So, I mean, there's a lot of stuff happening, of course, on with the neo brokerage space. It's a very exciting space, to be honest. I mean, we're moving really, really fast. Like I said, there are some very interesting new product features coming up, as well as new types of products. So follow us on LinkedIn. You can find our company on the BUX box. Thank you very much for joining this session. I think I've got 2 minutes left, so I really hope that you liked the presentation. I'll be joining the Q&A session in a minute as well. So if you have any questions for me, feel free to join me in one of the Q&A rooms. I'll be standing in the middle of the room, and you can just come to me and ask me any question that you might have. All right. Thanks everyone for joining. Really appreciate your time.